Hello and welcome to this week's Fundamentals. My name is Thomas, I'm the host of this channel. This week I want to look back into the market fundamentals. So where are we currently in the market? We see that the interest in cryptocurrency in general is decreasing, it doesn't hit the news, and if it hits the news, it's with bad news. Besides that, we will look into the fear and greed model, into Google Trends, and also in the Plan B model. Currently the stock to flow model is not doing that well. So with that said, let's jump into this week's video. So we will start this video by looking at the current prices. Therefore, we go to Coingecko. We see that Bitcoin is performing pretty bad, minus 8.1%. We see Ethereum, minus 12.6%. We see Binance, minus 10.4%. The only coins that are not performing that bad are the stable coins. But hey, in the end, they are stable, so we shouldn't look at them. So in my opinion, this price action is purely based on the economical bubble that we are currently in. So tech stocks are doing bad. We see high inflation rates. The US doesn't know what to do with the interest rates. They can't really go lower, but once they go up, this will also bankrupt a lot of companies because their debt will increase. So we're really in an economical bubble. And when people are afraid, they move to cash. But obviously cash is not a long-term solution with the 7% inflation rate. We haven't really heard bad news about Bitcoin. We haven't heard bad news about Ethereum. We haven't heard bad news about Solana or Cardano. Sure, Cardano has been delayed a little bit. Solana has been out for a while, but that is because there's a huge interest in the cryptocurrencies. So while the whole community and the whole industry has been developing, we haven't really seen the price action that should belong with that development. So let's go into the fear and greed index. We see that we are really in extreme fear for a while. So last week, yesterday, now, and we're currently at extreme fear 19. So we're going down. Extreme fear means that investors are afraid of exposure into cryptocurrency. So they're less likely to buy and more likely to sell. But we should have the opposite mindset, because we shouldn't follow the herd, because we know that only 10% of the crypto traders is actually profitable and 90% is just following the herd. So buys in too late, sells out too late. So we should do the opposite as what most investors do. So if we go to the fear and greed index and we look over the longest time span that we have, which is not involving the last bull cycle, we see that on the edge of fear levels of 10, it's actually a good time to buy, because every time it hits 10, the market goes up again. 10, the market goes up again. So it's a very good level to buy. And actually until 20, so if you have this imaginary box and you buy all your cryptocurrencies in there, you'll be very profitable at this point, because you buy in always low. So instead of looking at fear and seeing that cryptocurrency isn't good, your mindset should be, this might be a good moment to put in more money. Then we will go to the stock to flow model. There we see a big difference between the current price and the stock to flow model. This has disappointed all of us. And obviously Plan B wasn't predicting this. He made this model, it made sense for a long time, but currently the model is not really working. What we have to take in consideration is that the price has been trading way above the stock to flow model as well. We haven't really seen it trading way below the stock to flow model. We have seen it here. This was in 2019. We've seen that it got quite a bit below and it corrected again. So is the stock to flow model really not working? I'm not sure, but we have to take in consideration that it might not work the way it did in the past. So then I want to go to Google Trends, and we see that we didn't even peak out on the last bull cycle. So although, again, the industry has been developing, we haven't even passed the interest in the cryptocurrency industry that we had in the last bull cycle. So this means that we either had a very weak bull market and we are currently turning bearish, or the bull market is far from over yet. So Google Trends also doesn't really make any sense. So on the long term, I think we are still doing very well. If you are still holding into your cryptocurrencies currently, congratulations to you, because the weak hands are already selling. If you have any questions, please leave any comments below and like and subscribe, and I hope to see you next week. Bye.